What are the best strategies now if you're trying to access this kind of distressed asset or loan books?
I mean, in our space, it is a very competitive market, and I think a lot of these funds do have similar business plans, and deal deliverability is a very important thing to demonstrate to your investors. So, concerns have been expressed as to some of the prices, for example, that some of these loan portfolios have been sold at, where I believe some of the banks have actually written back some profits and the secured prices in excess of the written down value. But I think, there are people, with strategies who try to avoid the auction type deals, who perhaps go below the radar of the very large funds, where they think there's going to be less competition. And obviously relationships with operating partners are very important to try and secure asset-specific issues, because I think at the end of the day, a lot of these guys are looking for assets that are capital constrained, where they see some particular opportunity.
Well, the dream deal for any distressed investor would be an off-market deal, as David said, going under the radar and dealing directly on a one-by-one dialogue with a seller. And many of the sellers are, however, sort of run by governmental processes. They need transparency and equality on the market, and so those are very few and far apart. I think it's a little bit about looking outside of the sort of where the limelight is, where the big action is. There's always going to be a long queue in any auction that's taking place in Ireland, and now people are turning maybe more towards Spain and expecting something to come out of that. In some cases, doing some sort of a joint venture or some sort of an operational setup where the seller is sort of offloading perhaps staff along with assets, etc. These things are potentially deals that could be dealt with sort of off the radar and without as heavy competition as the normal auction processes, but they have been few and very far apart.
That's what
one of the one of the areas I get involved with clients is bilateral loan acquisitions, where the banks are actually happy. They won't tell you what they've got, but if you go and say, well, I know you've lent on this asset, we've spoken to the borrower, you go with sort of an idea packaged up, very keen to talk about that, and it's a very clean deal for them to dispose of the bilateral loan, and they know where they've got it marked, whether it represents a right back or not, but they're not going to tell you, I've got this, it's available for sale. But if you go along with the right sort of proposition, that's a good way of doing it. And we worked on something called Excalibur CDO, which is quite a smart thing that Lone Star did, and they bought up all of the notes of the Bundesbank, so they basically controlled the whole CDO, and we then did a pre-packed disposal of it to Lone Star. So they basically got a whole package of loans disposed of in one lot to them, and we sorted out all the remaining creditors, so nobody was disadvantaged by it. So the deal was with the Bundesbank, so they sorted that out. Off they went.
Yeah, because there's a lot of hung CMBS warehouse lines, that date back to 7 and 8, and a lot of those loans are, can be up to 500 million euro or pounds that's been left with, the original underwriter of the loan, and a lot of those are still around. So that is a more intelligent way to try and get into one of these positions, is to have exactly what Mark's described, have that bilateral conversation on that hung warehousing loan with the bank and see where you get to.